last night, Lori, Susie, and Colin and I met for a couple of hours. And we went around in circles like we always do. And then finally, eventually, began to actually sort out what we think we're trying to do to get to an actual functioning spreadsheet that lays out cash flow. And one of the big questions that came up, Chip, that here's my big confession. When you gave us, or when whoever it was at NEMRIC gave us all of our access codes to get into NEMRIC, I ignored it because I figured other people were paying attention and I didn't have the energy or inclination to figure it out. So I was the only one here last night and I couldn't get into NEMRIC to try and figure this out. So what we're wondering tonight is, first, what you think we should be using for monthly reports from NEMRIC to help us as we try and establish what we took in and what we expended in each month individually in the year, in this last fiscal year, for the last 11 months. And then what we were trying to figure out is, can NEMRIC do that individual month by individual month, or is it only possible to do it cumulatively? So those were our first questions, I think, right, Lori? Do you have questions, Chuck? That's the pregnant pause where you're supposed to jump in and say, here's what you can do with NEMRIC.
Okay, so I did talk to Stacy, I guess, and said that in order to get the monthly amounts, you have to run the report by period, period 1 separate from period 2. It does always report cumulative in the year-to-date field, but it'll tell you month-to-date in the last column.
Oh, that's what that is. Okay.
And Chip, is that a trial balance that we're printing each time?
No, that's a revenue report or an expense report, because there's not a period activity report on the balance sheet.
Right.
Balance sheets are current all the time, or by period end.
So can you pull up here the expense and revenue spreadsheets that I sent?
Yes.
Hi, Hal.
Hey.
Hi, Jim.
Let me make sure.
So Lori's going to share the fact, what she accomplished in the middle of the night last night, following our meeting last evening. And we're going to see if we're headed in the right direction here.
Hey, I got that too. I forwarded this one. Sweet. Are those up? No. Yeah.
Yes. Is this today?
I don't know how you got that.
Yes, 3 hours ago. Because Lori sent it to you.
Yeah.
You're in line. You're not extending very much.
Okay.
I was looking
Had a
at
little bout of food
Yeah, so
poisoning
let's
this week.
do
I think
the
I've done about 10,000 crunches.
Oh, yeah.
May as well join the Marine Corps.
Oh, wait. Yes. It's a keyboard. Double click.
All right, and then we'll share this so that Chip can see it.
Yeah.
Yes.
Hold on, Chip, we're
Oh,
coming.
man. It just downloads. Okay, that's fine.
Carter, were you going to turn on your note taker?
Good reminder.
Yes. As soon as we get this spreadsheet up here.
Okay.
What's not going like that,
I'll
I'll get the
get
lines
it.
and before it started
Yeah.
raining. Almost got
All
done.
right. Meeting now starts. Again.
Meeting now
starts.
You're gonna do it.
And now
My son's
we're
taking
going
driver's
to-
ed.
Which one would you?
Either one. Either
Because we
the, so we
didn't
have to
think
go back.
about that when we moved here and started
Yeah,
working.
there.
The only one we can get's over by St. Albans.
Yes.
So
Yeah.
I left at 4:30 yesterday.
So,
but we
like,
got
let's
home
do
at
these.
9:30 something.
Yeah, I didn't get here.
And then share.
But
I
I
can
mean,
have to go to St. Albans.
there wasn't a driver's ed program anywhere around here that was open. They're all filled up.
We can also.
We want to get them through that before
That's what I thought I was doing when I was right.
he goes back to school.
Yeah.
honestly, getting these driving hours and everything, we're gonna get that done, but
Okay.
we have to take the course. We have to do it during the summer, so it was like, pick the best of the worst distances.
Okay, Chip, you can see the document in front of you now?
Yes,
Okay.
All right, Lori, so now we've got Hal and Jim who weren't here either, so just
Yeah.
help us understand what we did.
So what I did was we got the documents from Carter, which were the expenditure through the end of May, beginning of June, the revenue, the expenses, and there was another sheet, a custom spreadsheet, and plus the some savings bank checking account. And so yesterday I took the very large spreadsheet that was really light and I turned it into a PDF. It didn't translate very well, but it was okay. So then in the middle of the night I thought, oh wait, I should do the other two, the expenses. And now Chip just says that this line, so the column L on here is actually a month to date for May. So we know, so this is actually pretty good right here to know that this column L is what we've spent in the month of May.
Got it.
And I didn't recognize that on the whole thing, but because the good part about that is that we should at some point be able to go back to the checking account once we know what the codes mean, which we think we figured out last night, and look in here and say, because everything in yellow is salaries, everything in green is benefits of some sort, and this doesn't, I had it in sections, so I'm not sure what happened here, but, because I had it sorted in sections. But if we do it up against the bank account, I think we probably could come up with some monthly reconciliation of this is how much we spent this month, which should come pretty close to what Jim gave us last night on this sheet here, which I left my entire bag at home. So
Make some quick copies.
Thank you.
So it's not a spreadsheet, but I don't know what you're using for a spreadsheet.
Yeah.
What's that?
I've done that on a spreadsheet, but I don't know what you're gonna use for a spreadsheet, so I just did it manually.
Right. And it was easy for me to just take because I have a pretty powerful Adobe for work. We had this conversation last night. Whenever I leave, that's the first thing I'm buying for home use.
Yeah. You can't go back.
Adobe. You can't go back. But I was able to transfer it, and it works beautifully. And I was able to match numbers. I was able to pull everything that I thought was salaries and benefits and like lump them all together. And then I went back to the spreadsheet. And I can get it here, but I don't think I can
I've got it.
share it. But in any case, if we look at the bank account, and Chip, I think you gave us, does anybody have the bank account, think I'm in the right place?
the account summary list.
Back to,
Here?
yeah, and then scroll over. This one?
Oh, this one. Yep.
So you could say share this one. I mean, if you don't want to.
Yeah, no, we're good. Yeah, that's fine. Okay, so with this one, this is the copy of the account summary for Passumpsic Savings Bank. And we took a shot in the dark last night. The GL means exactly what it says, general ledger. The AP would be the accounts payable. And I'm making an assumption that PR stands for payroll. Is that,
Yes,
am I correct? Okay.
Yeah.
So the really great thing about this is that we can actually look, if we add up, and I have to tell you that I had to stop at some point because I had work to do. My boss would really prefer for me to do my job. But I'll have time tomorrow while I'm working too, so. But I think because if we know what was paid in payroll, and we can look at the spreadsheet from this other spreadsheet and kind of do the, I don't know, can you see, oh, look, can you see that one too, Chip? This is the expenditures.
Yep.
So I think if we can come up with, if I can get this sorted again and then do the math with the salaries, we should be able to match the salaries and benefits to whatever went out,
What was actually happening
what was
in that
actually
month.
happening in the Pasumsic savings. Because my assumption is the Pasumsic savings bank account that we have on here is what we're paying everything out of.
Yes,
Is that
that's the
correct?
general ledger account.
Everything. So we're talking about accounts payable, we're talking about all the general stuff. And, well, in the general ledger is the deposits. And I was trying to match up the deposits with the withdrawals, and I think we came to an understanding of some of these numbers are probably numbered, like CR,
That's when we took money against the line of credit, right, Jim, where it says CR?
No.
That's cash receipts.
Cash receipts?
so is that, but that's money that's coming in. Where's that coming
Money
from?
that's come in.
Money is coming in, yeah. We ring that in the cash register every day, that's cash receipts.
So right here, Chip, this 20,
So I'm assuming, Jim, then we've got a line there that is 2.480 million.
yep.
And that would have been when you took 2.4 million out of the line of credit, I assume, and then we had another $80,000 that came in that day and other stuff.
So
Does that
was
sound right? This is last July.
August, September, October.
So that's why when I saw CR, I thought, okay, well, maybe that corresponds with what we took off the line of credit.
So is that correct? Because,
It could be both. I mean,
Yes.
I was just saying, you could account for withdrawing on that. It's a cash receipt going into
Yes.
right,
that. So
And it included taking the 2.4 million.
right. Because these numbers here, the period, this is July, August, September, October, and so on. Right, Chip?
Yes.
Oh, I figured it out. I feel good.
So is there any way to know when we have a CR line with income, where that income came from? Does this report, did one of these spreadsheets that back it up tell us that it was tax income or water and sewer income or line of credit income, line of credit borrowing?
No.
So we have no
So-
break.
Hold on.
I'm sorry.
Go ahead, Chip.
So the spreadsheet that is just the summary by period and source of the cash account is all cash activity going in and out of the Pasumsic Bank, which includes activity of revenue and expense from any fund, not just the general fund.
Right.
Typically, if there was cash moving between accounts, then the source would be GL. Jim would make a journal entry for it. It wouldn't be recorded through CR, cash receipts. So when doing the analysis of, can we break down the payroll and benefits? Well, oddly enough, that payroll hits the general fund checkbook for the net pay, not the gross. So you're comparing
He
apples
said
and
that,
oranges.
okay, not
Net pay, not gross. What we're looking at when it hits is net.
And then the liabilities for payroll actually paid out of accounts payable. So as an example, FICA Medicare has an employee and an employer side. Neither one of those affects the cash account until accounts payable pays the bill. So when you're attempting to do comparison, it's not that way in the world of accounting. The expenditures can be expended and no check issued because it goes into the accounts payable account. And then when you relieve that accounts payable, that's when cash gets hit. So the point of this simple routine was to say what happened in aggregate for the month. To try to say how much of that was water, sewer, taxes, state aid to highways, grant income. Those are questions to read in the budget status report for each month for every fund. And that's a lot more detail than what a cash flow is trying to ask about. So my attempt was to give you the simplest form of totals by month, which is what their document shows, and then to try to look at in a given month why there might be a spike. And in July, now let's look at, where's the 2.4 done by cash receipts?
That was July, I think, yep.
No, period, well, there's a period 4.
Period 4. Right here.
Period 4,
Oh, there it is.
there's a CR on line 16.
Yep.
And do you have taxes that are collected in that month,
Yeah, that would be
September?
October, right?
October.
July, August, September, October. That's October.
We collect some in October and the bulk of it in November.
So these two lines here, line 16
So I
and
would say,
20.
So that influx has a large number. In the notes column, I would say the majority of that is property taxes collected.
Yes.
exactly.
And so when analyzing the cash flow, those are major months that we collect a large sum of money. The majority of taxes we collect is not even our own. It's for school.
Right.
And so shortly thereafter, you typically would see an accounts payable hit for a large amount of money going back out the door to the schools for the quarterly piece of the payment.
Right there.
Which we do, right.
Well, that 2.42 may have been done by a banking transaction as opposed to writing a check.
Yeah, because that's on the GL
Right.
line. It should be on the AP line. There should be a 2 point whatever.
No, it used to be a
But
transfer.
depends how
now
it's
a
paid,
check.
how it's recorded.
Okay, Jim just made, did you hear that,
We used
Jim?
to transfer a chip, but now the schools want a check because it goes to 3 different schools, the high school, the junior high, and the elementary.
Yes, yes.
Still should have been
And
reported. as-
ideally, you cut a check and it goes on a warrant and it gets signed with a consent agenda.
Yeah, I just did
So
that.
then it would appear not as a journal entry by GL, but as an accounts payable activity. So that's why when looking at this, you gotta say, what happens each month? And what do we anticipate to happen in the months to come? And right now, the illusion is we don't have a cash problem. Look at all the money. We've still got money in the bank now. Which is why down towards, I don't know, row 80, I made a comment that we closed the M&T accounts, moved over $1 million into consumption. And that's not going to ever happen again.
Right.
So when you're doing your forecasting and your cash flow, you got to say, well, we can't consider that that's going to happen again. So you're looking at the past trends to then determine what your future trends are going to be. And knowing in the future you have payments for the various projects that are not in your past, but are now in your future to forecast out. So the deep dive into trying to balance the revenue and expense reports monthly to this doesn't work unless you know the whole picture across all funds. And some of the money you get in goes directly to a liability account, not even revenue, so you wouldn't see it.
I have a question. Do we have a reconciliation process?
You mean reconciling with the bank statement?
Yeah. I mean, do we?
That was always
Yes.
under the city manager's office because it's separate. You
Right.
can't pay it out and reconcile it, so they all went reconcile it, or Becky did.
Which is to say nobody's been reconciling it?
I don't, Robin may have attempted it. But
Robin has talked to me about reconciliation, so I was assuming she was doing that.
Yeah, I think so. But it was always done by the manager's office up until that, Becky left, whenever it was.
Yeah,
Just to separate it from us.
Well, I mean, that would kind of make sense. I mean, it should.
yeah, whoever's signing the check shouldn't be reconciling the account.
And all three of us downstairs are signers on the account. We never reconcile.
So,
I think Robin is doing it in the meantime.
so Lori, what I'm hearing Chip say is that really we are overcomplicating this.
Well, yeah, I was thinking that we could do it on here, but what I think for me, having this one at least gives us a picture of the budgeted amount for this past year and what we've spent for this past year.
Yes, so part of what that provides, correct me if I'm wrong, is when we see something that looks like an anomaly, like Chip was just talking about, in that one line, here's a big amount of money that came in or a big amount of money that went out, we would go here to try and figure out why.
I would think.
So that seems like something that every month on city council meeting, there would just be a report of what's going on. You know, here's what happened.
To show we would show an expenditure report and a revenue report.
Yeah, basically, you know, here's what we saw as revenue, here's what we saw as expenditure, blah, blah, blah. And Jim, you guys can talk to any crazy numbers or hopefully address any questions.
Go ahead, Chip, what were you going to say?
So my recommendation on what city council should get at least once a month, if not every meeting until they can understand it, is the balance sheet report of all funds. And then the budget status report, revenues and expenditures broken by fund for all funds. What you've been getting, I think, is 86 or something pages of a trial balance.
Right.
And that's soup to nuts and a lot of information, and you can't really tie what you have, what you owe, and what you're worth back to anything because the report is so cumbersome with that kind of detail. There is within the budget status report the ability to summarize that to what are called header accounts, so that in first presentation, you get the summary of the budget status. And then if somebody questions a group in the back pocket, you pull out the detail. And then you can take that group and narrow down what in that group might be an anomaly. So that is, I think on the 16th, that is one of my intentions, is to actually provide the same report that we went over 2 weeks ago on a Friday, the budget status and the balance sheets.
Yep, right. So we've asked Chip to be with us at the next meeting and to begin to work with the council
Yes.
on providing these reports and reviewing them with us.
Yeah. Instructions on what we're looking for, what we're actually looking at.
Yep.
Yeah.
So for today, if we can go back to the other report for a moment, Chip's summary report,
The bank statement?
the bank one, I guess.
It's the summary of the transactions for the cash account.
That's this one,
It's
right?
this one, yeah.
Yes.
So how do we turn this into a simple document like the one that Jim provided us in handwriting that shows month by month since July of last year what our opening balance was, what our expenditure, what our revenue was, our expenditure.
This is for next year.
This one is your guess for next year, right? Because so what I'm trying to figure out is how do we actually can we convert this document using a spreadsheet into something that we can look at the actuals for the last 11 months and then use the budget for the coming year and combine that with the actuals from the last 11 months to try and project exactly what's going to happen each month.
So, knowing that the withdrawal column are money leaving, deposits is money entering.
Yeah?
You can insert rows and do subtotaling
Yep.
so that you can then see what changed in value. You may want to have that be in a whole other column K, you may, just so you can pop it in. But what you're looking at is by source, and if we collapse that, we can just say, what are the total debits, what are the total credits for the month? What do we start with, what do we gain, what do we lose, what do we end with? That's the summary that's on that cash flow that they're looking for. But when you forecast in the future, if you've got $1.4 million on the water tower, that's not in any of these numbers. That's looking forward in the future to what do I need to pay for that I don't normally pay for.
Right, so we would add, we would do the first 11 months across, or 12 months if you count the month of June, right? And then we would, for 2024, and then we would project it out another 12 months for the coming year. And we would have, there will have to be some more entries in that one because we know that we've got particular both income and expense coming in on that one, and we're going to actually try and project.
Yeah, that's what the bank's looking for, is what's your future look like?
Right. So Chip, let me ask you a question, because this was something I had said to Rick. If I got a copy of the budget in a PDF and could turn it into an Excel spreadsheet and basically divide, like, again, figure out which ones are salaries, benefits, and then all the rest of it, and then forecast it divided by 12, I mean, that's kind of what they're looking for, right? This was part of our discussion last night, is that if we could take what's budgeted for July 1, divide it by 12, and then, I think Hal said this too before, and then in the back of our spreadsheets, be able to put in what we actually spent. Then the bank can see a little bit more flow, but at least we've got a projection, right?
Well, I think, yeah,
Well, so there are, if everything was actually straight line cost, then those things that you pay in December for long-term debt and then typically in May for long-term debt, you would take those budgets and divide them by 12, and really you're paying interest in December, then you're paying principal and interest in May. So in terms of a cash flow projection, you've misrepresented your long-term debt. VLCT is paid twice a year for the passive insurance. They're not paid monthly. So there are impacts of just saying, just take my budget divided by 12. The real world doesn't work that way.
Right, you're right.
And certainly municipalities far less work less that way. You wouldn't take your property tax revenue and divide it by 12 and say, I'm getting that much income every month.
Right.
It comes in 4 times. So that's why that initial spreadsheet says, here's what's happened in cash. And the same thing should happen approximately again.
Right, that's why we're going to base it on last year's numbers. We're going to take the budget and say, okay, if we budgeted this much in salaries last year, how did they actually get spent? That will be roughly, 1/12 every month. If we budgeted this much in property tax income, how did that actually come in? It came in twice during the year, 4 months over the year, 2 in the fall and 2 in the spring.
So the other spreadsheet that we were using yesterday, the custom one, can you help me pull that one up here?
Yes.
I may still have it in the bar up above, because I was working with it.
the cash flow one?
Yes, and that's got all the tabs at the bottom.
I
Yeah,
think it's the one labeled custom,
yeah, but there's another
and
one.
that one is one fund at a time. It's not aggregate of all funds, all activity, it's one fund at a time.
It's in it. Hold on just a second, Chip.
Jim, why is there,
Can
why
look
are
at
there
it.
two large incomes?
I don't know
That's
how
one
I did
receipts
that.
in October, and
This
November.
one?
What's driving that?
Yes, that's it.
This tax money,
Yeah.
Okay, and
part of
that's-
it. This is also.
Some of them are big, some of them are- Get a lot
But
of
in
it
here,
in October.
there's 600 some odd dollars.
So Chip, this is the custom report,
Stay in here. There's other things.
Yep,
and
Basically,
it has, ooh, sorry.
What was the rest of it?
So over here are all the
Well,
accounts.
that's the school thing.
And then this is what was my assumption is this is what is paid each month. So like, for example, this first one is the city council, okay? And then we get down here,
Okay.
and I don't have a number in front, I don't know which account this is, whether it's, you know, exactly which salaries, but,
Payment.
I do. It's the office administration because it zeroes out in November.
okay. Oh, right. Is that city manager's office?
Yeah, city
Yes.
manager.
Yeah.
Because we figured that one out last time. So this was this was the city manager for last year, salary.
Yep.
Okay, so what we see here is we see that the city manager was paid, or that office, the salaries at that office was $7,100 in July, $69 in August, so on and so forth. And then it ended with the small payment in December. And then this is the year to date, this was the budgeted amount, and this is what we did, what we haven't paid out of that because we don't have anybody in that position. So
But, go ahead, I'm sorry.
well, no, my thought is this the report then, Chip, that we should be using to forecast? Because then we could tell, you know, like, we could find the insurance, we could find the places in this, on this report of when things were actually paid. Does that make more sense?
in forecasting,
Yeah.
your concept of how much each month is expected to be spent, no matter what the category is right now predicated on your budget and the timing of when a given line will have expenses. So that is not much different than the cash flow that you see already on the cash account. And you know in November that your payroll numbers dropped, and they dropped for a reason. You had less employees. And forecasting out, if the normal number is 250,000 out of payroll monthly, I see no reason why you wouldn't say it's 250,000 every month.
Right. Because the other.
Because you're missing people now, and that's not hopefully going to be the case in the future.
That's exactly what I did on this one.
Say that again, Jim?
Exactly what I did on this one. I forecasted the payroll a single amount every month.
You just took the total budget and divided it by 12.
And that's
right?
good, I mean,
We estimate there's, between payroll and benefits, there's $350,000, $60,000 every month.
and that's fine from a conservatism standpoint, because then you can reconcile it if someone's not there, it's not paid. Great, we paid $5,000.
And I'll add quickly, the other challenge with using this document, before Ann can do it for me, is that, like, this is a classic example of why we can't use this, because the city manager's salary was spread across 3 different budgets. So this is only 40% of the city manager's salary that we're looking at here. There should be another 30% in water and another 30% in sewer in the actuals for last year.
This doesn't have any water or sewer in it.
Oh, thank you. I stand corrected. So for that reason, I mean, this document is 800 lines long, which is to say that it's 400 data lines long.
Yeah.
Right? And the numbers are all over Kingdom Come. So I appreciate the effort that they are making to try and get us to simplify, right, what we're looking for here. And I think if we can use Chip's summary page and then just go through, play it out, use that, create next year's budget, take the budget totals and just do our level best to project what's going to happen each month. That's all they're really asking us for. And it's what Jim has already tried to do here.
Exactly what-
Well, I think so two things. One, if we use that, we put then we have a notes page. So having this ready to go to something, whatever.
Yep, or
something
something.
bank.
Yep.
A notes page. And just have 5 to 10 notes. I would come in there with 5 to 10 questions that we expect them to ask. So one, how are you going to, because right now I'm looking at the biggest monthly deficit is 3.4, so let's call it 3.5, just to round up, 3.5 million monthly deficit. Is the largest amount.
Wait, where?
Is that December?
That's June. At the end of the calendar, you've got December at 3.3. So, and you've got a deficit of 3.5. And I just want to make sure we're reading this correctly. And I think it's important that we understand all the numbers in here. So when we're talking about the monthly deficit, so our expenses are I'm talking June of next year, roughly 3.7. We've got estimated receipts of 250K. The difference between those is 3.46 or 3.436. The one thing that is kind of weirding me out is there's nothing in here for our account balance.
Right, you don't see what did we start with,
Exactly. That's the only thing.
and what did we finish the month with, and therefore what do we start the next month with, and then what do we
Exactly.
finish
That's
the
kind of the one thing that weirds me out a little bit, because this would lead us to borrow more or have a line of credit for more than we may need.
No, I think, Jim, correct me if you think I'm wrong, but what you're asking for is actually the cumulative surplus or deficit.
That last column tells you what you're starting the next month with.
Right,
Okay, so that's,
right. So we finished the month of July, according to Jim, $375,000 in the hole. And at the end of August, we're now 820. That's a cumulative deficit now of 825,000.
so we think,
October you turn plus, and you collect all that back in tax.
so we think the worst it's going to be is 1.275.
Correct. However, keep this in mind, this is not assuming we're working on a line of credit, this is not a revolving line of credit. So it looks like, okay, then we're going to pay it all back down again and get back down as low as $51,000 in January.
But we have,
But we've actually still borrowed at that point 825, 900, 1.2, and another 1.2. We've already borrowed $2.5 million at that point,
yeah, okay.
right? Oh no, wait, sorry, that's wrong. That's cumulative. We've borrowed a total at that point of 1.275 million.
But the line of credit has to be for 2.5 at that point, where we have the big hit at 1 point, the cumulative surplus or deficit.
No, the line of credit has to be the total of all of the negative numbers.
Yeah, well, that's what I was saying. At that point in time, it's 2.5. So you're really at another 1.3. So you're really closer to 4.
No, that's what as of the end of, on this list, as of the end of September, we will have to have borrowed 1.275 million total. You don't add those three together. 1.275 million is the total we've borrowed so far. Right, Hal?
I'm just making sure I'm,
So in July,
okay, sorry,
we're 375 in the hole. In August, that number has grown to 825 in the hole. By September, it's grown to 1.275 million in the hole. A total of that amount. Okay? Then we pay a whole bunch back, and we get it back down to a negative 51,000 by January, but it's as if we're starting over.
Well, because the revenue, the 3.4 is estimated receipts, and that's tax revenue. This does not include anything from the line of credits. These are just receipts.
No, I'm just assuming that if there's a negative or a deficit number in that last column, it is line of credit.
We're gonna need to.
We're gonna have to borrow it
that.
from somewhere.
That's right.
So the way to find the total we're going to have to borrow through the year is by adding all the negative numbers in the next to last column.
Which is,
375
yeah,
and 900,000 is 1.27. Okay, that's that 1.275. 1.275 plus.
about 9 million.
That's the 851.
5 or 2.6.
And plus the 50.
The 851.
Yes,
The 51,481 are cumulative with the 851,
that's right.
I believe.
I think you're right, Ian.
It's October and March. What we're looking at. Here.
20% credit.
and what about the 3.3 million in there?
That doesn't matter because the 3.3 million, it looks like a huge deficit, but what it is we took in a bundle of money in taxes and then we shipped a bunch of it out the door to pay the school bill. Right? So that,
Are you sure this includes school?
After you paid the school, you said still at 378,000.
exactly.
Yeah, it would have
Then
to,
your
it would have to
expense, it
include the
doesn't
school because, it would have to because
Then 75, so that drops.
we're talking about receipts and expenses.
So I think this highlights exactly what I'm saying, is we have to have our notes.
It's got to be really clear.
Our
That's right.
ducks have to be truly in a row.
And if you add up those numbers, as I understand it, what we're saying is we're going to need a $2.2 million line of credit next year to manage cash, to do nothing but finish the year $2,700 in the black.
Oh, that's just everything perfect.
Of course.
But that's just, I'm
But
sorry.
this year, we borrowed 2.4.
No, this year we borrowed 2.75.
Oh, that's the other one.
That's right.
And this is forecasting all of the payments that are associated with the water tower and the causeway.
Nothing in the water.
See, that's where I'm starting to go.
That's water and sewer. This is just general.
But I think,
So that, yeah.
no, but I think.
But the water and sewer supposed to be paying for the home.
Yes, but they're still going to have cash flow issues.
Okay, but I think, let me ask this question.
Please.
I think, though, that what she wants to see so that we can do two things. One, turn whatever's left of this year's debt into a one-year term note, and re-up a line of credit for the 2 point whatever,
Yep.
operating line of credit.
Yep.
Okay. She wants to see our operating, but she wants to see what's happening in our operations. I don't think this whole idea with the water tower and the fire truck and the other projects are yet. Those we have to do to get the bonds.
No, because, go ahead, I'm sorry.
No, because She just wants to, well, I mean,
No, because we're going to start making payments on a fire truck in November.
no, I understand.
So it's part of cash flow.
Well, I understand, and so that, we have to put that in here.
Well,
but we,
here's the good news. The fire truck, in a very broad guess, is in there, because I know because I put it there back in January in the budget. So the fire truck payments, although I may have figured them wrong, are at least represented in that budget, okay? And the water tower, if we use the budget we just passed, also includes debt service on a $3 million payment on the, payments on a $3 million loan for the water tower. So if we use those budgets, we should be okay. But here's my question. Can we go back to Chip's cumulative summary one more time? Chip, are you still with us?
Yep.
All right.
I can't see what you're looking at, but I'm
Sorry.
listening.
I'm sorry.
So if we go back,
Just go down. Yeah.
hold on just a second. Okay, can you see our cumulative again, our copy of the account summary again, Chip?
Yes.
Okay. This account, for the last year, had we been operating entirely the way Chip has now got us consolidated and operating, with all of our activity coming out of this general ledger, or this general account, this in fact does give us the cumulative cash flow, including all three budgets, water, sewer, and general operating. Right, Chip?
All 9 funds.
All 9 funds.
Here.
Right. So what we need to do, again, I think we are overcomplicating this. We're going to have to use this, and we're going to have to just assume everything is in one account, which is pretty much what Chip's done for us now. And for the coming year, we're just going to look at everything coming in and everything going out, which means it's going to look different than the handwritten version of cash flow that Jim created for us, because it has to include water and sewer.
So I guess maybe we prepare 2 of these.
One for water and sewer and one for operating?
Well, then you can call it 3. However you want to do it. There's the cum, and then there's the 2 different groups, because that'd be a question they're going to ask. Is, okay, what's happening, because it's obviously an issue. And if we're talking about it like this, it's a valid thing to have prepared. And then you can talk to each point. Here's what's going on in our general operating. Here's what's happening in our water and sewer. Here are the actions that we're taking in water and sewer. Here are the actions that we're planning on taking around general operating. That would make, I would assume, a banker, and that's what I'm saying, think about the 5 or 6 questions that they're going to ask, that they're going to push on. Walk me through this. What is this made up out of? What are those questions going to be, so that if we have those 5 or 6 questions, and Jim, you might have some, like, what would you want to know? You were looking at it. Let's just get those out there and be ready for them. Because once you get through the first 3 or 4 or 5, people tend to run out of steam.
That also makes a lot of sense, because while we're talking about this as cumulative, technically, all of sewer income should only be spent on sewer expenses. All of water income should only be spent on water expenses, and all of the general fund should be spent on general fund expenses by state law. So that if you don't separate them, it looks rather confusing. It makes it look like, when the general fund money comes in and we have a water expense, we'll spend it on that.
Well, so again, be careful, because what Chip's been trying to teach all of us is that there's a difference between accounting by bank account
Yes.
and accounting by book, right?
Right.
And all of this money is going to be mixed together, and what the bank is most interested in is how are we managing cash. But the books will tell us exactly what we've spent out of each of those accounts, and whether one of them is borrowed from another. That's where it's going to become clear. Again, correct me if I'm wrong, Chip, but I think that's what you've been trying to help us understand.
Yes, Carter, I sent you and Rick an email Yesterday morning around 6 a.m. with 2 spreadsheets in it.
Yes.
One is I think, accumulated summary water, accumulated summary sewer.
Yes. Got it.
If you can pull
Okay.
up either one of them.
Okay. Sorry, Larry.
I think
You know,
for those who can't understand or grasp that concept of the Assumption Savings Bank is one checkbook and it pays for everything. All the money goes in, all the money comes out. In the accounting world, there is an account called due to from, an interfund account. This one happens to be for sewer. This again breaks down the same way, GL, AP, AR, UD, and it gives a balance at the end. Understand, this account represents cash associated to the sewer fund, fund number 8. And notice that the balance is constantly negative. The sewer fund is spending taxpayers' money to keep up with paying bills, and has been at least for 2 years. This particular fund, as you get towards the bottom, you're going to see the number drop because we transferred, we closed the M&T accounts right there on
Yeah.
line 122. We moved 376,533.33 out of M&T accounts into the Presumptive savings account, savings bank, which dropped the obligation from over $1 million to under $1 million. But as of June 4th, when I did this, we're back over $1 million owed. So the sewer fund, as much as you'd like to say sewer money is paying sewer bills, taxpayer money is paying sewer bills. Whatever they're bringing in ain't enough to cover their costs. This has accumulated over years. This is the fund that I think that the city council needs a special bond authorization for a general obligation to cover the deficit of sewer and pay it off over a number of years, maybe 10, so that you raise $100,000 more over 10 years plus interest, so that that bond can put money back into the general fund Presumptive savings bank and relieve the obligation that is owed by sewer to the general fund. It will be literally a liability to sewer, and the cash goes into the pooled cash resource and becomes available so the taxpayers can pay bills too. If you can open the water one.
yes.
So actually, I have a quick question before we go to water. Well, or we can see it in water too. So how do we see when we charge people for their sewer and we make a deposit of that amount of money, where would that show up, Chip, on this chart? On this summary?
You see that listed as owed from being adjusted?
Yes, that's where it's coming back in.
AR and UB, accounts
Yes.
receivable and utility billing. Those are the equivalency of deposits of money,
Got it. Okay.
okay?
Yep, thank you.
So, again, now we're in water, and we started the year $706,000 owed to the general fund. And
Yep,
we first break out of that, it looks like just at the end of August, for a brief moment, and then
yes.
we're right back in debt.
Should that say July
Right, and this is-
2023, or is this actually 24?
This is 24.
It's fiscal year 24, but it's July 23.
Oh, these are our actuals from a year ago.
From fiscal year 24, then when you go down far enough, you get into the current fiscal
I
year.
understand, thank you. Yep,
Okay, so
Yeah.
you see that water's not much better off than sewer. It is constantly using taxpayer money.
Yeah.
which hopefully we will see turn around in the coming
Go
year.
down far enough to where you see
Like, we
the
get
M&T banks close.
But then that's,
So
sorry.
probably 122 like the other line.
Okay.
Line 110.
Yep.
We closed the M&T accounts and moved $628,000 out of M&T to the Passumpsic Savings Bank.
Yep,
And for the first time in months, the general fund actually held money on behalf of the water fund. For the first time in months. And it didn't take us until the next month to go right back in the red. Why? The general fund, Passumpsic Savings, made payments on a construction line of credit and paid vendors for the water tower. And you're right back in the hole again.
650 grand that we paid out for the water tower, right.
As of June 4th, when I did this, you were $654,000 in the red in water owed to the general fund.
And that's, again,
So-
that's because we paid out all the bills.
We're paying on the water tower.
So that's the conversation as to why the pool cash does involve water and sewer and does need to project what more it's going to pay on behalf of water and sewer. And we have additional bills coming in July, maybe August, relative to water costs for construction. And so in that projection of the future months, what is it that we're going to have to pay either for services or for debt that is sitting on a liability line now that you need to add to your projection of cash flow. That's why cash flow is not just general fund obligations, because right now all you got to do is pay $1.8 million and then say I need to borrow $1.8 million and I'll have my money back.
So the increase in the water and sewer fees held an additional, how much? 200,000 or something? Wasn't there an amount that was added somewhere in the math for the water tower? Was that?
I understood that the rates were only going to cover the expenditures that were budgeted.
Right.
But one of the expenditures we budgeted was our best guess at what we would have to pay to service the $3 million debt for the water tower.
And so that is, again, a budgeted number. That is not to try to generate surplus.
That's
That's
right.
not to try to recover losses to the general fund.
Right.
That was just to hit our budget.
Yep.
Chip, did you include in this the ARPA money that we received and I think another grant that we received to build the water tower for about $200,000 in income? Is that income included in this presentation?
If the money got deposited into the Passumpsic Savings Bank, it is within these numbers.
It's included, okay. What about grant money generally that comes in to the city during a year? How is that money included in?
If that went into the Passumpsic Savings Bank, general fund checking, it's in these spreadsheets.
Exactly.
But you have a habit of opening a bank account for every grant and putting the money in it, but I believe the money goes into the general fund, the Passumpsic Savings account first, and then gets moved.
And to be fair, some grants do require that. They
Yes,
require-
we actually opened an account
Yes.
intentionally.
Most grants are reimbursables, and so by the time you get the money, you've already spent the money, so the restriction on non-interest bearing separate account doesn't exist.
Right.
Yes. And there's one grant that I know typically has that, and we still have money in it, and we don't really, there's,
Yeah, goes in, goes out within 72 hours.
Yeah. Should.
Well, it should, yes.
Yeah.
So again, when doing your projections in your cash flow, what are you projecting for the $1.8 million payment on the line of credit that exists today in the general fund? It is not in the cash flow that you have now. You have to add that money going out. And then additionally, whatever additional things you're paying for construction and the cosmic, for the water tower, for all those projects, that you know you've got to set money out. Likewise, if there's a portion that is reimbursable by grant, or there's a local share that's supposed to come in, theoretically, the local share is already in your checkbook. That's not extra money coming in, that you're already supposed to have it. And so you can project that we're going to spend $1.4 million on a water tower, and we're going to get $500,000 in grant money, if those are the numbers. Those are not in these numbers presented. This is the past. Those are numbers you must add to your cash flow projection.
Right.
So all of the extra effort of analysis is really, between these three spreadsheets, it clearly explains that water and sewer owe the general fund money. And how do we get those funds whole unless those funds borrow money in the long term and put that cash back into the general fund coffers? Because as much as everybody would like it to be accounting by banking, your checkbooks are in the red, water and sewer, and they have been for years.
In the end, that's what we're borrowing a line of credit.
Chip, has anyone ever explained to you that many years ago, we had a surplus in water and sewer, and about 13 years ago, salaries started getting paid for in inordinately large amounts by water and sewer. For instance, the city manager's salary was paid 60% by water and sewer, 35% by sewer, 25% by water, with no proof of any kind and no reasoning of any kind as to how the city manager was working 3 out of every 5 days for water and sewer. And that the 60% should never have been charged to water and sewer. She wasn't working that much in water and sewer. And so having sewer and water pay too much of her salary, and probably the salary of her predecessor, is what caused the surplus that we had in water and sewer to decrease. And then there was the second employee as well, who we were paying too much out of water and sewer for. So when you say at this cumulative time that water owes X amount and sewer owes X amount to the general fund, I would submit that they don't, and that the general fund, actually, it's the people who, the debt needs to be taken by the general fund people and not by water and sewer. What's your theory about that? And maybe it will satisfy me if you tell me what your theory is.
So, when I was manager in a town and a village, they had water and sewer. It was 50% town, 25% water, 25% sewer. That was how my salary and 3 other salaries were distributed. we were the administration for those enterprise funds. So is there a fair number or reasonable number? I would suggest if you believe the taxpayers should pay back those, they get a petition to raise the money through taxation and transfer that value to water and sewer. I don't think you're going to get many signatures. But where this really falls apart, apparently, in my opinion, is lack of understanding and sharing information on balance sheets that said, hey, we're running into a problem with these two funds.
That's right.
We need to do something about it. And if it has to do with lack of rate increases, that's a common reason why you run in debt. Because everybody forgets that we need to raise the rate, just even the cost of living 3%. They should go up even if your budget doesn't go up. Because the day that it turns out that you need 36% is the day for 10 years you didn't do 3%. So salaries aside, that's a battle for another day. Today we have a cash problem in water and sewer. It is contributing to the cash flow problem in the general fund with something.
And it was, I've conceded a long time ago, Ann, that I don't disagree with your logic about what was done. But you see the problem, actually. One problem is it's a crapshoot what number you're going to choose about whether it should be. Should it be 5%? Should it be 10%? Should it be 50%? 60%? It's an open question that should be answered by the city council and the water commissioners, which in this case are the same thing. In this instance, I don't know how we go back, because it isn't entirely, this deficit we're looking at is by no means entirely attributable to that. I can count almost $1.4 million just in ignoring the fact that we were no longer getting leachate money from Casella and not raising rates to cover it. That's a big portion of that deficit as well, right? And as Chip says, costs were going up that entire 7, 8, 10 years, and no one was raising the rates to cover those costs that were going up either. So I'm not disagreeing, I'm really not disagreeing with your underlying assumption that some significant portion had to do with that. I just don't know how we can go back and in retrospect try and determine what it should have been, and even if we do, how to figure out how to reattribute it in the year 2025.
I think the piece you're missing is the outrage.
In the next 3 weeks.
Well, you can say that, but the piece that has never been acknowledged is the abuse that was handed to members of the city.
So just to be clear, I feel like...
Never acknowledged.
Okay, and I think we've been doing our level best, and I personally have been doing my level best in every meeting since I got elected to acknowledge that it was done inappropriately and to try and respond to it, right? So I don't know how to do that any differently, Pam, other than to just allow the outrage to bubble over every once in a while and recognize it and then move on. Really.
It would probably be appropriate to do that, other than, and I'm not saying that this is what you've done, but over the last few years we have been patted on the head.
I agree.
We weren't being kicked. And it was right there.
Right, and that's where the bubbling over comes from.
Oh, yeah.
So I do get that. I'm just trying to say, in as dispassionate a manner as possible, given our 3-week timeline here,
Yeah.
This is how we got to kind of deal with it at this point. And I want to say, I will never forget the night I sat in this council room among the community residents, and I had been fed the same bullshit line that everybody else was about and I'll use the word that kept being used, shrill, presentations from certain members of the community. And one night I'm sitting there and Ann stands up and she has 2 pieces of cardboard and she's printed the amount of money. I can't remember exactly how it worked. I could probably do it if I had to. And I went, oh, I get it, right? Like it was where my awakening began to hear the content and not just the critique that was going on from the community.
Well, it was so convenient to call us shrill because,
I understand.
We're fucking stupid. What would we know?
I get it. And I get all the other pieces of the undertone on that as well.
Yeah.
So I get it. So Chip, I want to come back. We got to wrap up because we all got to go and I'm late for a meeting. But what I still don't understand, and I'm sorry, I feel like I'm being thick because I keep asking this question, but what Jim has done, which you haven't seen
I know, I'll send you a
by hand, does not actually satisfy what the bank is going to want from us because it only manages the operations side of the budget, not our entire cash flow. And so I'm trying to determine, do we have a water cash flow, a cumulative synopsis, a sewer cumulative synopsis, an operating cumulative synopsis, and a combined? Is that where we're headed? Or how do we get to what Ellen Stanley is going to want from us?
So I believe Ellen Stanley wants to know what's going to happen in your checkbook.
Yeah.
And that is combined.
So we just look at that one and we don't worry about the specifics underneath it, really, other than we check month by month to make sure we're projecting.
And the supplemental backup to what is causing the cash flow can be seen in the water and in the sewer cumulative numbers.
Yeah.
And by the way, thank you very much, we deposited $1 million into your bank from M&T.
Yep.
So you gained cash on hand
Yep.
from another bank. So, I understand what you want, but we've been trying to service you as well.
Yeah, no, don't get me wrong. I'm just trying to make sure that what Ellen wants from us, you're saying that's part of what you would say to Ellen, like here came that $1 million. And she will get that. I have no
The
doubt.
only reason the general fund summary that I threw out there has any money in it is because we took money from other bank accounts and put it in there. Otherwise, we'd be presenting, yeah, we're in the hole. You're covering checks for us.
Right.
And we cannot repeat that effort again because we don't have any more big bank accounts.
Can't do that for me from North Country Federal Credit Union too?
Some member on the board? She's right, yeah, Jack.
All right.
So if you took that long sheet that I gave you as the summary for the general fund checking, unfortunately it ends June 4th and we've got another few days on it. The bank account has increased a little bit because of payments coming in, I think, against water sewer bills that are due on the 15th.
Yes.
And you're about to issue $400,000 worth of accounts payable, as I see that on the books.
That's right.
So the cash hasn't hit yet, but I know it's going.
Yep.
So in the projection, this particular month, you got to show that you have an obligation to pay $1.8 million to start with, over and above your regular expenditures.
Right.
Immediately. You don't have that money.
Right.
Yeah, that's not.
And then next month, you have to pay for the water tower construction, either the loan or to pay the vendor, and you don't have that money. You have the Causeway project, which I don't know all the details about, but I don't believe you have that money. So the projection of cash to me seems holistic numbers with a justification of what we think the number is.
Okay.
In that all the analysis heretofore doesn't really matter. We can say what we have, what we're projecting for July. Look at last July, what you pay in AP, what you pay in payroll. Should be about the same numbers. If you want to add 3%, add 3%. Just say we added 3% for the cost of living. But I think that the projection really is she's got to know what you're anticipating for large expenditures. She doesn't care that you're buying a fire extinguisher for $11. She wants to know that you're paying a contractor $800,000 and you don't have the money. And what I really am hoping is that they will get to a position where we can, with the authority you already have, determine what the bond anticipation note can be for water, get it, record it against the water fund, and put the money into the general fund checkbook. And a year from now, have the bond bank be able to take that and convert it to 15, 20, 25, 30-year note.
Yep.
And then still, I pose the question of go to the taxpayers for a general obligation note for sewer for $1 million to recover deficit owed to the general fund to be paid off over a period of 10, 15, 20 years. And adjust that as a debt to put into your budget to raise annually. Because I don't believe you're ever going to raise surplus in your budgeting practice. So making it a debt means you gotta budget it. But I don't see sewer coming out from underneath $1 million ever, unless somebody says we are intentionally raising the rate simply to generate surplus cash.
Right. All right, so I think, Chip, that we have enough, probably without your help, on Monday night to play around with the small group and see if we can actually put the numbers on the paper that include all cash in and out of that account at Pasumsic, our best guess for the coming year. And we will come to our meeting on Tuesday morning with you and Ellen and others with that. And if you could help us by starting with the statement you just made, kind of your best summary of what it is we really have to do here fairly quickly in terms of debt relief instruments. We'll start with you on Tuesday morning and then let Ellen tell us what Pasumsic thinks they're capable of.
If they don't hang up, yep.
Okay, if they don't hang up. The good news is we have a remarkably friendly and supportive banker. I mean, Ellen clearly wants to help us here, and Pasumsic's been a partner to this city for a very, very long time. So, you know, I'm not actually worried about that part. They want to see exactly what we're doing, which is that we're getting serious.
The bond, just because I've been gone for a couple of weeks and I apologize, the bond can't happen until we're
The earliest possible time we could bond on the water tower that already has approval would be to request the bond in December and not see it until probably April.
Okay, but I think that's what you're saying, Chip, is our plan is with this to make them whole, Pasumsic whole, by assuming that long-term debt that we can then budget for.
Yes, but then there are two other debts that we're talking about, maybe three, right? One is going to be to relieve the sewer obligation.
Of the general fund obligation.
Exactly, and that will be whatever, you know, a 10-year whatever note to do that. And in order to do that legally, we can create a short-term debt instrument, but we can't create a long-term one that's more than a year.
Yeah.
To do that, we got to go back to the voters.
That's the bond, that goes into the bond.
Exactly.
I think in the long run,
And so,
Chip, in the long run, go ahead.
I just want to say, if you go to the public again for the $1 million general obligation bond for sewer, you may pose that question again, can we raise an extra $220,000 in taxes? Because we know that already is a shortfall in the FY26 general fund budget.
Yep. That's the other problem that he's discovered on the operations side that got us into this mess, which I can clarify for you later if you have questions about it.
For the general fund.
Yes.
So Chip, I think what we need to do is figure out some way to make the due from zero, from 8 and 9, and get the water and sewer to where they're paying for themselves, and we wouldn't have to be borrowing money.
Which I think is what we're working
That's
at.
exactly
That's
where we
right.
want to be.
That's right.
Right, so the 1.8 that's on your line of credit in general fund is primarily the amount of money water and sewer owe you,
Exactly.
okay? It didn't help that you didn't raise the municipal tax adjustment, but nonetheless, water sewer has been using general fund cash for years.
Yep. Okay.
And that's why if we can get that bond for water to be full-fledged, whatever total cost less the grants in aid is what our bonding authority is. A 1-year bond anticipation note with PSB converted to a Vermont Bond Bank note for 30 years makes sense, gets you cash back in your pocket.
Works for me. Okay, so we'll see you Monday morning at 9 o'clock, or sorry, Tuesday morning at 9 o'clock.
Yes, so not 5 o'clock Monday night?
No, let's skip that. I think it's just making you sit through us doing this kind of hand wringing all over again. And I think we have enough information now using these account summary sheets that you created for us. I now understand that I really was overcomplicating it in my own head in terms of what Pasumsic needs from us. So we've got enough to work on it.
Clarifying question.
Yep.
Monday evening meeting.
We added this last night, Lori,
Okay,
Colin,
I don't know.
and Susie and I,
Okay.
to try and work again on this at 5 o'clock on Monday late afternoon.
Okay,
So anybody is welcome. We'd love to have
I'll
you.
try and make it.
Okay.
sweet,
And we're just going to work on creating this document.
yeah.
No driver's ed on Monday, but I have to be in Burlington.
Okay?
Hey Jim, can I see the Post-it note numbers? I don't know if they're.
Yeah.
Are we done with Chip? Can we let him go?
Yeah. sorry.
Thank you, Chip.
Thanks, Chip.
And then I'm just getting the final details on this and then I'll send it your way. So, and then honestly, I have put it into an Excel doc, so I'll send you both versions.
Perfect,
Yep.
thank you.
Thank
When she
you.
sends it, it
All
doesn't
right, have a
include
good
sewer and
weekend,
water.
everyone.
Yeah, to build upon. All right, thanks, have a great weekend. Okay.
Another Sunday one.
I feel like I'm in Groundhog Day. I keep having, I know I'm having the same conversation over and over, but I also feel like each time I get a little bit clearer,
Yes.
like it's taken me 24 conversations to get to the point where I actually think I can describe this to somebody else.
Which is Groundhog Day.
That's Groundhog Day. Right, that's true. That's the whole conceit
The
of the
whole
movie.
movie was, how do I get to Addie McDowell?
That really dates you, just so you know.
I know. You brought it up. But then again, the mimeograph
Yeah, that might have done it too.
also kind of put us in a corner.
So have you ended this meeting?
Yes, I think we were officially.